Hello, good evening, and Assalamu alaikum. And welcome to the fifth episode of our webinar series brought to you by Atta Hospitality Finance Consultants. We are currently live from Dubai with a very learned panel of experts who will talk us through today's topic, unlocking the benefits of shared finance services. The webinar will last for 1 hour and therefore it will end at 6 p.m. UAE time. I'm Rabia Shaukat and I'll be your host and moderator for today's session. A little bit about myself. I'm a PwC qualified chartered accountant as well as an ACCA with a finance and accounting career spanning over 14 years. I've held finance leadership roles in various regional and international organizations across the Middle East, including Marriott International, RAK Hospitality Holding, Dubai Silicon Oasis Authority, NEOM, etc. I'm also the founder and managing director of Atta Hospitality Finance Consultants. Atta is a Dubai-based, full-service, niche hospitality consulting firm that provides bespoke advisory services across the hospitality and tourism sector. We work with owners and operators of hotels and residences, mixed-use development and branded residences, travel and tourism sector, as well as recreation and adventure concepts. Our areas of specialization are corporate and hospitality finance, finance transformation, pre-opening services, hospitality advisory, as well as learning and development. Well, that's all about me. I would now like to request our panelists to give a brief introduction about themselves and their company. In the order of left to right, we'll start with Paul Bridger.
Hi, good evening. My name is Paul. I'm Chief Operating Officer for Rove Hotels. I think I'm the only non-finance professional on the call. So please bear with me if I'm not as clued up as the other panelists. But I'll give you a more operational insight and a kind of management insight into some of the questions. Hopefully you've heard of Rove Hotels. We're a homegrown brand born in Dubai. We have 3,500 keys open with a similar amount under development. And we're a kind of lifestyle hotel brand from this region. And very focused on our team and our guests, and look forward to this discussion this evening.
All right, thank you, Paul. We'll go with Ish next.
Hi, good evening, everybody. Firstly, thank you, Rabia, for the invitation. My name is Ish. I'm the CFO for LPM Restaurants. LPM is the formerly La Petite Maison Restaurants renowned. It's a global brand. We have 8 in operating currently globally. We have a 9th one opening in Vegas shortly. My background essentially is finance within hospitality. I'm pleased to join the panel this evening. Thank you.
Perfect. Thank you, Ish. Last but not the least, Barka.
I think Barker's still on mute.
Barka, are you able to unmute yourself? Hi, Barka, are you able to unmute yourself?
Yes, now I can. Hello, everyone. I am Barka, and I'm a chartered accountant from Pakistan and a CFO finalist. I have an experience of over 15 years in finance, accounting, risks, and internal controls, working both in Pakistan and Dubai. I started my professional journey as an auditing professional with PwC, and soon after my accountancy qualification, I moved on to the corporate sector. I've had the pleasure of working with various industries, including large-scale chemical manufacturing, pharma, FMCGs, education, and not-for-profit sector. And lately with aviation industry, I am currently with Emirates Group as the finance manager. Before joining the Emirates Group, I was actually associated with Engro Corporation, which is one of the largest conglomerate of Pakistan. And I hope to see some of my colleagues from there today in this presentation, because as part of Engro Corporation, I actually had the chance to lead the financial services transformation for the group. It was an amazing learning experience, and I look forward to sharing practical insight into today's topic based on that.
All right, perfect. Thank you very much, Barka. So before we really kick off the panel discussion, I would like to give a bit of a background and context to the audience that what are we really going to talk about. So usually in traditional organizations, finance departments are dedicated teams that exclusively work for the business. It works very well when an organization has just a single business unit or a legal entity, or is just generally a small or medium size enterprise. However, when the organization grows and the business has multiple business units, the dedicated resource model may not be the most efficient model. Unless, of course, the industry is in a specialized industry or the finance teams require specialized skill set to provide services to the overall organization. In all other cases, a more optimal operating model in that case would be a shared service model, which is a single group level team that provides shared services to multiple businesses within an organization. Needless to say, shared services bring in a host of benefits, and they bring in economies of scale due to which costs are reduced, processes are standardized, efficiencies enhanced, etc. Now, shared service center is not a new or novel concept. It has been popular since the 1990s. In fact, more than 80% of the Fortune 500 companies use shared service model for their operations. However, as we speak, shared service centers have not really achieved absolute perfection. But with the use of automation and advanced systems, shared service centers continue to prove their value to business by saving them time and money. Now, as far as the shared services goes, there are quite a few terminologies which are interchangeably used, and I'd like to spend a minute here to explain that. Firstly, the shared service center that I've already briefly touched upon is a large independent business unit that provides shared services to multiple business units within the same group. Shared service centers are usually engaged to provide specific tasks such as accounting, legal, tax, human resources, procurement, etc. The core idea of shared service center is to centralize, automate, and standardize business processes. Now, if the same tasks are outsourced to a third-party vendor by an organization, then that would be called business process outsourcing or BPO. BPOs are usually large organizations which have even bigger economies of scale, and therefore their overall costs are lower than the in-house shared service. So if an organization has standardized business processes, that can be well outsourced to BPO. However, if the requirements of a business are more unique, then in-house shared service would be a more apt option for that business. It is also possible to have a hybrid operating model for organizations where standard processes can be outsourced to a BPO, whereas non-standard processes or let's say specialized operations within finance are retained in-house. Now, moving forward, a more advanced and integrated version of shared services is called the GBS, or the Global Business Services. Global Business Services is a more evolved version of shared services, which is truly global and can be country-based, region-based, or multinational. GBS has the capability of having the in-house expertise to provide more professional and technical services, such as data analytics and even decision-making support, beyond the routine, transactional, and administrative support. Now, while shared services provide a host of benefits, shared services implementation has had a mixed track record of implementation. Usually, shared services implementation is a very slow, tedious, and painful process. That is normally because of lack of proper planning or lack of sufficient experience within the local in-house finance teams. And if the organization does not have the right systems, tools, and processes, it can quickly fail. Needless to say, if the shared services fail, it can be seriously damaging to the organization. So in today's webinar, we'll take this discussion further and we will discuss with our panel of experts what are the benefits of shared finance services and how can those benefits be truly realized and unlocked by successfully implementing the shared finance services. Then we look at what are the available tools and technologies that are transforming the landscape for shared finance services. What are the KPIs to monitor the progress of shared services? And lastly, we'll also have a look at how the shared finance services can be integrated and collaborated with the rest of the organization. In the end, we'll have a brief Q&A session. So if you have any questions during the webinar, please pop them in the chat box and I'll be happy to take them up with the panelists towards the end of the webinar. So with this background and context in mind, let's start our panel discussion. I'd like to go with Paul first. So Paul, as CEO of the organization, in your opinion, what organizations are more suitable for clusterizing services or setting up shared services hub?
Okay, so personally, I love shared services. So whether it's finance or any other function, I think. So in terms of what organization is most suited, or organizations are most suited, I would say, I mean, I'm more of a hospitality specialist, but I would say any organization that has multiple business units, particularly business units in the same geography or under the same brand, I think works really well. In hospitality, I think it can apply, you know, if you look across the same kind of functions, so whether it's a restaurant group or a hotel group. If I look at Rove, you know, when we started, we consciously put in a shared services model across all functions, all back office functions. And this gave us a couple of benefits. Firstly, it allowed us to scale quicker. It allowed us to share the best practice. So yeah, in terms of which organizations can benefit, I would say generally organizations with multiple units, multiple business entities, and maybe, you know, consistency across the brands, particularly where you have consistency in supply chain and functions.
All right, thank you, Paul. Moving on with you, Ish, you've previously led shared services within Jumeirah Group as well. So beyond just the cost saving, which is one of the obvious benefits of shared services, what are the main benefits of shared finance services that the organization can expect to achieve, or rather must achieve, by implementing shared services?
Yeah, look, I think Paul alluded to it during his question just earlier. And apart from the economies of scale, as you alluded to earlier as well, there's multiple advantages, if you will, for the shared service route. And remember, I think we talked earlier, or you certainly put it on your slide earlier, about when you have multiple business units, it makes sense to have a dedicated shared service, but you need to think outside the box, that it's not necessarily within the organization. You can go to the BPOs, even if you're a small organization with, say, 1 unit or 2 units, right? So there's always a pros and cons by having in-house to outsourcing. So certainly improved service quality is certainly something that I've seen during my time, is that you have the ability to standardize processes to make things more efficient. You clearly pick up and identify where things are being done incorrectly, not necessarily wrongly, but a more efficient way of identifying how other BUs are doing things more seamlessly and more efficiently. And you can start benchmarking where you have certain BUs that do certain activities a lot more slicker than the others. You know, it also allows the business unit to focus more on the core activity of the business. So if you're in the hotel business, it allows the front-end staff to deal with the guests without having to worry about the bills and the payments and all the billing that goes on with it. And, you know, I think it makes the operations more slicker, and especially in hospitality, where, you know, it's such a competitive industry, that unless you're servicing the guests, you know, you're missing an opportunity. So it takes that focus and really focuses and enhances it to make sure where it counts, which is where the guest is, right? And not necessarily sorting out the back office, where hopefully you have a robust structure that will manage all that. There's multitude of other aspects, right? There's data analytics, better insights. Why does one perform better than the other? How are they doing differently? You can start benchmarking internally when you have a shared service center and a central team that have visibility across the platform. When you're isolated and you have one BU and a person is on premises, he's only looking at that in isolation. But the fact that you have a central team that has visibility across different scenarios of the same business units that are in the same core business, they can quite quickly gauge where things need improving, where things don't even need improving, and where the best in class is.
Yeah, you get a consolidated view of the entire business, and then you can take the right action at the right time. Yeah. So,
sorry, could I add to that?
Yeah.
If I could add, sorry, just wanted to, I think the team piece is really important, but it's also the management of those business units. Because often, if you look at hotel management, if your managers are tied up trying to negotiate deals or whatnot, or managing the finance function, you can have the similar, if your management on the ground are focused on the guests rather than duplicating finance resources, then I think it's the same thing applies as Ish mentioned.
Yeah. Thank you, Paul. Moving on to you, Barkha. As you mentioned in your introduction as well, you have previously led the Share Finance Services in one of the largest organizations back in Pakistan. So from your experience, what is the CFO's roadmap to successfully implementing shared services?
Thank you, Rabia, for that question. Honestly, when you were mentioning at the start of the presentation that shared services has been there, so this is a fact that very few people know. That's actually true. Shared services, the delivery model has been there for many, many years, but it's only lately that organizations have actually started to reap benefits from it. And the reason I would say is the roadmap. Roadmap is what differentiates a modern shared service center. So today, shared service delivery model is not just about consolidation and cost savings through FTE reduction. It is more about process standardization, greater data transparency, automation, process re-engineering to ensure continuous improvement. And it is also about exceptional service levels to internal and external customers. So that's like a whole mindset change. And so these are the key elements for the roadmap, which needs to be there in the roadmap. You need to have process optimization. You need to have automation, at the start, as part of the transformation, you need to have like an automation journey defined for you. So these are the key elements. So I'm not gonna, because in the interest of time, I'm just gonna highlight some aspects on the process side, which are also as important for the roadmap. So like any, change management program, a feasibility study here is very, very important, because a feasibility study helps you lay out the existing processes or do kind of a comprehensive system assessment to identify the areas where there is real juice in terms of operational inefficiencies, areas where there's a lot of time being spent on firefighting instead of value addition, and obviously bringing them under a central umbrella would help bring in more efficiencies, or locations where there are poor service levels and rising support cost. So it will help you identify the right processes to start with for the centralization and for implementation of shared services. And it will also help you lay down an effective strategy. Another thing that I would like to highlight is mapping of process split, because shared services, what it does is it carves out a function from the core business. So previously, finance would operate, either in disparate locations or, but it would be one finance. But what shared service would do, it would carve out a part of finance from that the larger finance and move it to an independent organization. That involves a lot of communication challenges, higher expectation as a service delivery unit. So it is very, very important that you define the process split between business, core finance, and the shared service finance, and you set the responsibilities and accountabilities straight at the start. Another aspect before I move on is the clear communication. So as we all know, a lot of transformations and change management programs, they fail largely because there is no clear buy-in or acceptance from the key stakeholders. So that is very important because shared service transformation, as you said, is a very long journey, and it has disruptive effects on the organization and also from the employees on the employees due to changes in organizational structure and responsibilities. So it's very important that there is a buy-in from the key stakeholders and there's a clear communication on the strategy and the plan. So a sound strategic plan, which is clearly communicated and properly executed, keeping these factors in mind, would ensure a successful transformation.
Thank you, Barkha, for a very detailed response. So I think my key takeaway from what you just said is we need to have a clear gap analysis in the beginning to see where the pain points are so that we can carve out the right strategy for the implementation. And of course, we need to set the accountability right from the beginning and get the buy-in of the senior management. Moving on to you, Ish, again, from your experience, can you share us, although Barkha has briefly touched upon it, what are the challenges that arise once you have done the strategy and you are now in the implementation go-live phase? What are the challenges that arise during the implementation phase and how can those be overcome or mitigated?
Yeah, look, that's a very good question. And based, again, on my experience, it's great that you have stakeholder alignment in terms of what they want to try and achieve with a shared service center. But one of the aspects that I found extremely challenging was the resistance to change, right? So the idea is that you go into a shared service center, but it's not a situation where you continue doing the same thing over and over again. I think there is an opportunity for the new shared service team to come in, have a look at the processes, redefine them to make sure they're fit for purpose and where you are today. I mean, hospitality, I'm sure Paul can vouch for this as well, is an evolving business. How we do things today is nothing like what we did 10 years ago. The way customers come to us, the arrival, the reception, the going to the rooms, there's so much automation that today I can book. And by the time I get to the front door of a hotel, I've already got my pass key on my phone and I can go in and check in. So I think we are going towards that. So I think it's fine from the back end that we have existing processes, but we should make sure that the challenges that we face on resistance change is actually, again, coming back to Barkha's point, is make sure the communication is clear. It's not just that we're continuing doing the same thing over and over again, but let's have a fresh look at it and let's take the opportunity to change and improve on those as well. Data integration and migration. Look, data integration and migration is critical because you do a cleanup, but then you're looking at historical data. And if there's not a proper cleansing and it hasn't been brought in, fine, then that's another potential risk and a challenge that you'd find. The other one is technology implementation. It just dumbfounds me, right? In hospitality, we just have a myriad of systems that overlay each other. There's no one system that does everything from an end to end. And I think the sooner we get to that, and I think the better it will be for hospitality, that we have one point of control in terms of systems, and it allows IT to be a reduced team, but be able to be agile enough to be able to support the business where it needs to be. Performance measurement was another thing that people were saying, well, hang on, you're measuring in terms of what I'm trying to do. Well, hang on, we need to step back. And again, a communication issue is that we have been given now an opportunity to perform a particular service for a client, and that's a business unit, whether it's internal or external. But we need to self-check ourselves to make sure that we're hitting the given milestones. Are we closing on time? Are we getting the revenue flash reports out in time? Are we collating the data, and is it reliable? Is it sense checks? Is it double check? And the flash reports that go out in the morning, are they reliable? And can the manager react on them as well? So these are all things. It's all about, for me, it's key is the resistance to change. How can we address that more effectively? So maybe it's a better communication, but the bigger the organization, that communication sometimes from top down actually loses its true essence. So I think it's making sure that it's in bite-sized format and it's actually showing them exactly what Barker said about the roadmap in terms of this is where we are, this is where we want to go, and this is how the journey is going to unfold.
Yeah, thank you, Ish. So change management and project management, of course, is key in successfully executing. Coming back to you, Paul, in the beginning, I did briefly touch upon the hybrid operating model that organization can also adopt, where they can either partially or fully outsource their finance operations to an external services provider. So in your opinion, as a CEO, in what circumstances do you think that partial or full outsourcing of back of the house function can be done to external shared services provider?
So I think it's probably more of a risk than centralizing. And in what circumstances, I think you have to be convinced that you can have the same or a better service level at a lower cost. In short, I mean, there's a lot of considerations. I think you need to think about, obviously cost is always the big one that stakeholders want to talk about, but I think things like, have you got the right expertise in your team available? Have you got the ability to support your growth? So, you know, if you've got a fast growing business or an internationally growing business, then you may want to, that may change your decision making around outsourcing or partially outsourcing. I think technology, I think Ish made a great point there about technology, in that, particularly in hospitality, I think we have about half a dozen systems that you have to have a system to get them all to talk together, which is quite painful. And I don't know anyone that doesn't have a system that's painful in hospitality. And if you do have one, please let me know. And then there's other points around, you know, softer points around things like risk management. You know, by outsourcing, do you take some of the risk away? Or questionable. Things around, you know, service quality, because it's easier sometimes to hold an external party to account for the level of service you receive. There's a thing I touched on about an international business. You know, if you're going international, then of course different regions have different requirements around reporting and taxes, etc., and you can often buy that info a lot cheaper than doing it yourself. And then potentially around things like, you know, time zones, depending on, you know, whether you know what time zone you're operating in, can be a consideration. But I think, in short, are you convinced you can get a better level of service for the same or less cost, would be my question.
Yeah, I think that summarizes well. Moving on to you, Barker, I mean, you as well, together with Ish and Paul, have emphasized enough on technology. So from your experience, what role does technology play in again, successfully implementing and then executing shared services? And what are the emerging technologies in this space?
Oh, okay. That's a very good question, Rabia. Technology role is, I would say, very important in unlocking the true potential of a shared service center. So as we all know, shared service center is mainly based on the premise of consolidation of processes, data, locations. So through that means it provides the organization, having a shared service center provides the organization with a unique advantage to explore innovative automation technologies that may not be possible with decentralized or disparate systems. So today there are various emerging technologies that are supporting the need for a standard and consolidating data or systems, as is envisaged under the shared service model. Artificial intelligence, as everyone knows, robotic process automation, enhanced cloud capabilities, these are all transforming today's shared service landscape. RPAs have become must-have for all shared service organizations, given their common use cases for transaction processing. Then there is automated workflow solution and resource management solutions, because solutions such as Jira and ServiceNow, they are very important to manage automated task management and timely project completion. Such solutions are also necessary from the aspect of optimal use of resource management, which is one of the key advantage that you get from shared services or centralization of operations. Similarly, complaint management solutions are being very frequently used by shared service centers to get feedback on the service and improve it to enhance customer experience. Today, there are generative AI solutions such as ChatGPT, which can be explored to offer better customer experience over there. Then there is electronic data interchanges and OCRs with recent embedded AI features, which are being increasingly used to automate invoice processing. There are smart data analytic tools which are very useful for shared service functions, like everyone was talking about. Having a consolidated central data enables you to perform a very good set of analytics, and these tools, they really help you in gathering the right kind of market insights that can actually create opportunities for revenue growth. So to sum it all up, technology supported end-to-end data management is very vital to the success of shared service organization. It allows finance to operate efficiently with improved cost performance, higher data security, transparency, and better service delivery.
Wow, that's like a lot of options in technology. And that means a lot of investment may be required, which brings me to my next question to Paul. Now, with technology and setting up everything, getting the right people on board, certainly an immediate investment may be required. So how do you really make a business case in front of the stakeholders and the owners for such kind of projects?
So I think you have to consider the kind of hard costs, the upfront costs versus the soft costs and the ongoing costs. So by hard costs, I mean, what's your initial setup, whether that's systems, offices, etc., etc. What's your ongoing costs in reality? And then what's your transition cost, particularly if you have any, I was quite lucky in that we set up a shared services model when I started, so in my most recent company. So that's how it's always worked. But the transition is always hard. So what's your transition kind of costs there? And are you going to run both models for a period of time together, or are you going to run them? Are you going to do a kind of straight switch? And then, of course, what's the soft side of this? How are your people going to adopt this? What's the communication around this? And there's also, we're talking about business case, but I think you need to get all the stakeholders on board. And in order to do that, you need to consider all these kind of factors. And then I think being really clear about as well as your cost, what's your KPIs? So what do you expect to see as an output of this change? And what's the kind of benefits to the organization? What's the risks? Because of course you do have risks, even if you're not outsourcing, you're keeping a centralized model in-house. There's other risks associated with that. So I think consider the not just purely the financial cost would be my suggestion, but think about the wider impact on the organization and how you mitigate that.
Right. So we need to clearly demonstrate the financial return on your investment, as well as all the qualitative benefits that will be realized by the organization in the long term. Coming back to you, Ish, let's say now that we have done the strategy, the roadmap, we've made the business case, the owners are in alignment and agreement, how do we make sure that the transition from the existing dedicated resource model to the shared service model is completely seamless with minimum downtime? How can we really, effectively manage that transition?
Yeah, and I think Barker has also mentioned this earlier, and apologies in advance because some of my comments will be repetitive now. So I guess it's the comprehensive planning, right? It's a clear roadmap with specific steps, very detailed in terms of timeline, who's responsible for it, what the deliverables are, what the expectations are, and then involves key stakeholders at the different SBUs or at different departments, right, to make sure they support the progress in terms of how this initiative is going to go. So as long as that clear, comprehensive map planning is there and everybody's aware and they're all on the same page, then you make sure that you identify the core processes, what's important for the business and which are the functions or the certain aspects of those processes which are critical to the business. And I think make sure that those are specifically handled as a step one. Data cleansing and migration, as I mentioned before, make sure that that's, because, historically, it's great to see what your results are today, but everybody won't say, well, what did we do this time last year, this time last month, right? So make sure that data migration is there and readily available. Technology, again, I touched that because of the integrations, right? We're so highly dependent on multiple systems talking to each other, and make sure those aspects are thought about and planned in advance. Clearly, you know, once you go live or you're about to, you make sure you do run some parallel runs, right, to the existing system, to the new shared services, make sure the outcome is as expected. There might be some nice surprises, that things that you were done ordinarily, there's issues there, and shared services is now picking up issues that should have been addressed a long time ago. So, you know, parallel runs for me is key. The change management communication is key as well. And then it's making sure that everybody knows what the line of command is where do I escalate if I have an issue, who do I call? So as long as those are mapped out. And one thing I've come across that people have ill thought of is the contingency planning, right? So on a disaster recovery, when we're in the hotel or we're in a particular business unit, people are aware of who to call what by first names. But when you move into a shared services and there is a disaster, you know, we need to have those contingencies in place, because nobody will know who to call, right? Because it's very much at its infancy. So I think the disaster recovery is something not very often thought about. But I think for me, that should be priority. You know, if there's a power shutdown, because we're all dependent on the internet today, right? Everything's on the cloud. We can't check a guest in. There's some offline bandwidth to be able to do those, and that builds up. But, you know, the disaster recovery for me is critical. And then most importantly is just try and get everybody's buy-in on a collaborative approach, because it's a journey. You're not going to get things right from day one. There are going to be hiccups, and I think those are the aspects. As long as you position your things right and you sell it correctly, and you've got all the buy-in, and I think that's certainly a good road to some level of success to implement shared services.
Thank you, Ish. I think you made a very important point regarding contingency planning or disaster recovery, which certainly we never do, or we often forget to do. That's clearly very, very important. Coming back to you, Barka, picking up from one of the points that Ish previously mentioned regarding performance measurement, assuming that we have now successfully implemented the shared services, how do we make sure that it's clearly working? So what are really, you know, the critical success factors or KPIs to ensure that shared services is on track? And probably we can incorporate those KPIs in the SLAs as well with the business units.
Yes, so Rabia, I would categorize the KPIs into 4 broad themes, which can be useful for monitoring the performance of shared service organization. So first would be the transaction processing KPIs. Obviously, shared service centers, the traditional model is all about transaction processing and the operational efficiencies. So the foremost obviously is how well you're doing in terms of, you know, operational efficiencies. So you have KPI like number of invoices per FT, average turnaround time, error rate, FT cost saving per function. So that is one. Then there is functional KPIs. So obviously this is still finance that we're talking about, even though it's operating on a, you know, customer delivery service model, but it's still finance, and it would have its own, you know, functional KPIs around finance processes, around reporting, around compliance. So from that aspect, you could have like monthly closing, days sales outstanding, timely submission of sales tax returns, you know, unapplied cash as percentage of account receivable. These would provide insight into the quality of financial reporting and would also ensure monitoring of compliance. Then there is service KPIs. So service KPIs is because now shared services is about being is operating under a service delivery model, and it wants to ensure that it delivers exceptional service to its internal and external customers. So from that aspect, some of the, you know, things that you can track is you know, because obviously I'm assuming that a shared service center would have a complaint management system. So things that you can track is number of tickets registered, tickets turnaround time, or maybe feedback service conducted, how regularly those are being conducted, customer satisfaction index, you know, measured out of those feedback service. So that will help you address any performance level issues. And then last but not the least, and I consider it my personal favorite, I feel finance has always been into assurance to a certain extent, and which is why I feel it should have assurance. And I would just merge dashboard reporting into it, because we know that, this is the ultimate future of finance, where finance will be doing a lot of analytics and dashboard reportings. So assurance and dashboard reporting KPIs. I feel shared service center is very much positioned to provide comfort to stakeholders on the financial processes integrity by having these KPIs. And this could be balance sheet reviews, how many balance sheet reviews perform, how many reconciling items not, they're out of balance sheet reviews, how many unreconciled items, open items which have not been reconciled. Similarly, exception reportings, a lot of exception reportings provide a lot of assurance on the financial processes integrity. Similarly, on the dashboard side, you could have a lot of useful data analytics. So yeah, these are the 4 categories that I would say you can use to develop your KPIs.
Thank you, Barka, once again for a very detailed response. Coming back to you, Yash, finance is often, blamed for working in isolation. So when we are setting up a shared finance service, which is obviously one larger team that will provide services to the entire group, how do we make sure during, again, the implementation process that we design the shared services in a way that meets the needs of multiple departments?
Yeah, look, that's a very good question as well. and I'll slightly disagree with you, because fortunately, we've transitioned as hospitality finance people. We're not locked away in the office. We're actually finance business partners, right? Which is a very refreshing change, because we get involved commercially. We get involved where we have to identify the work from the welcoming the guest to the departing guest to make sure that they pay the bills. And I think it's a holistic environment. And, our roles as finance custodians of any businesses within hospitality has completely changed over the past decade. For the better, if anything. We're not just the number crunchers. We're actually looking at the business in terms of where it's been, where it is today, and where it's going to go as well. And it's great that it's a common practice now. When you do budgets, you do another 4 years. And I know sometimes it's just a guess, but it makes us think about our journey going forward. Because look, post-COVID, I think the landscape for us in terms of business as usual, I think is out of the window. I think every day is going to be very different for us. There is no longer an ease of doing business from a finance perspective. Is looking at historical data and saying, add on another 5%, and here we go, that's the budget done. I think those days are gone, and I'm glad they've gone, because it now means that we all do our budgeting based on ground zero, right? Just zero out, everything refresh. It helps, so that from that perspective, it also pushes us into the boundaries of saying, let's review our costs. So we don't just do a plus 5% because we reckon the prices are going to go up next year, but we actually look at it in detail and say, are these actually legitimate costs of what we need today? And are these legitimate costs going forward? So we, every nook and cranny that we unfold, we turn the tables around and question everything, including where the revenues are coming from. In the past, we were heavily reliant on the Chinese market, the Indian market. All that is completely displaced now. It's very difficult to pinpoint that source market nowadays. There's a lot of volatility, economic downturns. The way the pound has dropped and it still hasn't recovered, all those have an impact to us. And I think we should be cognizant of how that impacts us as a business, because you look, every business in the UAE, I believe, is global, even if it's only in the UAE, because I believe we attract that crowd. And that crowd mix always changes and is going to continue to change. But that's more for us to remain agile, so that we get challenged by that, but it also helps us think beyond our boundaries.
Yeah, thank you. So certainly we have to have a collaborative approach and to truly work as a finance business partner by including everyone and having an inclusive approach. And I think you gave a great example of zero-based budgeting, right, where you evaluate every business from scratch by taking all the business units together in that process and not just doing the exercise in isolation by just incrementally increasing the budget numbers based on historical numbers. Coming to you, Paul, again, I think I would have a similar question to hear more of a CEO perspective here. How do you see the shared finance services playing a role in enhancing the operational efficiency and effectiveness of the organization? And how can that be really, integrated with the rest of the departments?
I think Ish answered the question already for me very, very well as a business partner. I think he said business partner, and I think for me that and an enabler. Those kind of two things, I think, and now, as he rightly said, finance has massively changed. It used to be a reason to not do something, to try and block you from doing business, and now I think almost without fail, all finance functions now are there to support the business, work hand in hand. To be more specific, I think a shared services model for me gives me real comfort around standardization of processes in operations and kind of from a best practice and risk perspective. I think also that having a bigger team centrally allows you to have better qualified or more specialist roles in functions, treasury, et cetera, where you can get bigger hitters in your team by centralizing your resources. So I think that allows the business to obviously move faster. Benchmarking and kind of the analysis side, it becomes a lot easier if one team has perspective across your whole business rather than trying to, often when you don't have that, you have somebody centrally that's trying to gather all the data from everybody. So I think that kind of benchmarking piece is great because you can have open conversations without any kind of concerns around upsetting different teams and whatnot. I think we spoke about this earlier, the ability to scale, I think is important, particularly in a lot of UAE businesses. That's very important. Hospitality, you're often shrinking, growing, buying, opening, etc. So I think that centralized model allows you to do that. But I think, really, that whole enabler piece kind of sums it up. Business partner enabler.
Yeah, I really like the term enabler that you mentioned, which again emphasizes the point Ish earlier made about being a business partner, a true business partner. We're almost on time. I have a last question for you, Barka. We've talked enough about the investment required in technology. We've talked about how historically shared services have kind of failed in certain organizations, which takes me to the last question, that what kind of skill set is really required within the finance team to successfully first of all design and resource the shared finance services, and with that skill set, what are the opportunities here for the finance departments, for the finance professionals to upskill themselves?
Yes, so Rabia, as we all, I think, discussed to a long extent, that the shared service delivery model or the current finance is a completely different mindset from the previous back office finance that we used to have. So we spoke about, Ish and Paul, they both also mentioned about business partnering, exceptional customer service. Then there's continuous improvement through process optimization and automation. So with all this in mind, it definitely requires the future finance professionals to be, more agile to respond to changing customer and technological needs. And I would say our change management training would be needed, definitely. Soft skills such as problem solving skills, collaboration, and stakeholder management are very critical. To develop the shared service organization as a center of excellence, as what now what the shared service organizations are, targeting to be. Also, what would be needed is a strong functional knowledge with a critical eye for precision process engineering, because a shared service model now is really about continuous improvement. It's not just a one-time automation that, it's done and then you move on, because it is about exceptional service. So it is about continuous improvement. So you need to have that kind of, process engineering and a, critical thinking skill set to actually work on it. Another emerging area that a lot of people are talking about, which will eventually become future, shared service talent, would be sustainability skills. So there is a lot of, talk on media about ESG reporting, because, now this is part of enterprise agenda. So this is also likely to be added in future to the financial services scope. So yeah. So these are all the skills. It's definitely very different from the skill set that we used to think for the finance professionals. But yeah, it's going to be a great, change.
Yeah, thanks, Worker. I think there's certainly a lack of talent pool as far as shared finance services go, because we don't have many. And the areas that you have highlighted are certainly the areas where we can upskill ourselves by undertaking certain training programs, attending these webinars, etc. And certainly sustainability is definitely one of the key areas, especially for the region. This is a year of sustainability for UAE as well. COP28 is happening, and ESG is soon going to become a very, very crucial area of reporting for finance professionals. All right, so this almost brings me to the end of the webinar. Let me just quickly see if you have any questions in the chat box that we can take up with the panelists. So I don't have any new questions here. In addition to what we have already discussed, we can wait a couple of minutes. If you have any additional questions which you'd like to ask to the panelists, we can take that up.
Ravi, can I just add on a very key point actually Barker raised? One of the things that is a real a bugbear for me is that, within hospitality, it's unfortunate, but it's just the way it is. You'll find a lot of very good people that have worked through the ranks and have ended up working at the back end in the back office. And it's a very valid point that Barker raised, is that, you'll find a lot of very good technically qualified people, but unfortunately they lack the professional qualification. And the reason for that professional qualification is actually how to do things correctly. So for instance, IFRS, US GAAP, UK GAAP, HKFRS, there's a multitude of different aspects. And I believe that they're clearly passionate about the industry. They're clearly passionate about finance. But the only aspect that they lack is the appropriate guidance, right, from a formal qualification. And I believe as leaders within hospitality, I think we shouldn't be pushing those out. And again, coming back to your point that resources are challenging to find, and I believe that that's your pool of resources already there. But it's just leaders having to say, you know what, we need to help these people get to where they want to be. Because a lot of people that I've come across, they just haven't had the opportunity to go to university, to get a degree, to get the appropriate qualifications, but they've attained a very good experience throughout the working life in an industry that they feel passionate about, in a particular department that they feel passionate about. But I think as leaders, we should be pushing forward and helping them achieve their qualification to be able to set them what the rule book says about how entries are posted, how not entries not to be posted. I think that correct methodology is something that we should take on our shoulders and be pushing for that. And then that will certainly help, the lack of resources that we just alluded to earlier within the shared services, because that's my biggest problem is that, I've looked at a few shared services, and the first thing I say is that what is the level of qualifications? I'm just as bad, I'm guilty, but, I want to make sure that my books are handled by somebody who knows what the correct entries are, and to be able to flag inappropriate, non-compliance issues straight away as a red flag to me.
Yeah, I would agree. I think for hospitality, since it's a very, very specialized industry and we have a limited talent pool, which kind of keeps rotating from one organization to the other, and they have a lot of sector expertise. But as far as the functional expertise goes, we do have a gap there, and with obviously continuous professional development and individual training programs or succession planning that the leaders can lead for their teams, that will really help in the long run. I have now one question. Have you personally witnessed or been involved in the implementation of a shared service center inside your organization? What is the most contributor to the success or failure? I think we have already talked a lot about it, but perhaps Ish or Barka can give a summarizing closing remark here, since they have personally been involved in the implementation of shared services. The most important contributor to the success or failure.
So I will mention two, and then Barco can mention two. So I think for me, I'll touch on the success, Barco, if that's all right. So for me, you mentioned it briefly as well, SLA, service level agreement, clearly documented. So you manage expectations from both sides to saying, what is it that you expect from the business, what the business is expecting from you. And as a service provider, here is what I'm going to provide to you by what day. And then my measure is, again, what Barker also touched on, is the KPI. I used to do a monthly KPI dashboards by the 4 components, as Barker mentioned as well. And it's clear transparency. If I missed a deadline, I've documented that, and I'm actually sharing that with the business unit to say, apologies for the month of April, I missed the close by 2 days, and here are the reasons why, right? And it's very clear, it's transparent, there's no finger pointing. It's more about, here's what I've promised to give you, here's what I'm delivering to you, and if there's a gap, here's what I'm doing to try and bridge that gap.
Yeah. Barka, final
yeah, sure. I'll cover the failure, but Ish, trust me, you put me in a very difficult position because I got my colleagues here and I'm sure they would know when I'm talking about it. But yeah, so I would say, speaking from my experience, the greatest reason for a failure would have been the process split that I spoke about. So the roles and responsibility matrix, because we have seen, in actual life, we have seen cases where, once a shared services, it's carved out of the organization and it becomes an independent organization, or even if it's, outsourced to a BPO. In both cases, there are greater challenges because there is higher expectation from even the core finance, which stays with the organization, the corporate itself, that has greater expectations from the shared service finance now, even though it's the same set of resources. In the case of a shared service center, it's the same set of resources and the same set of processes, but they would expect more, and they would probably because of the ownership thing, they would not listen to all those challenges that they were previously open to listen to, because those very that very part of organization was part of them before. So I would say it's very, very important that you have like a roles and responsibility matrix defined, because now there is one more stakeholder involved in addition to business. So previously it would be like business and finance. Now it is business, core finance, and then there is shared service finance. And then shared service finance is not just talking internally, it is also communicating with the external stakeholders. So for instance, in case of treasury, it's communicating with banks. So then how is the relationship management handling? Because relationship management obviously is not with the shared service finance, which is a separate organization. It stays with the corporate in most cases. So yes, that's that has to be handled very carefully and properly in order to ensure that it doesn't become a failure.
Yeah, thank you, Barka. I think role and responsibility matrix is certainly key, and that should be a key component of the SLAs with the business units, so that you can do the performance measurement at a later stage and address any gaps. I am almost running out of time. One last question that I can take: how to highlight the importance of shared service within the organization, because shared services are normally termed as back office team. I think this has also been addressed previously when I asked Paul about how do we really make a business case in front of the owners or the decision makers as to why it is important. And we've talked about enough that we have to convince the decision makers by demonstrating them both the financial and the non-financial returns. But Paul, if you'd like to add further here, feel free to jump in.
Yeah, I think there's it's multiple stakeholders here. So I think we talked already about the kind of leadership stakeholder. But I think within the organization, that's the people that are getting the service, I think, is often the case. So I think making sure that whether you outsource or whether you have a centralized function, that they're very much involved and engaged in the business. And I think at all levels, and they're not treated as the team that pay the invoices. I think and that's just about culture. That's about the organization's culture, and making sure that they're very much part of that culture. And they're not a back office team. They're very much a front of house team. They may not deal with guests as such, or even in hospitality, but they're very much a key part of the team, and making sure that it's management's job to kind of recognize that.
Ravi, I would like to.
Yeah, Burka.
Sorry, I just wanted to add something to it, but I mean, you can finish and then I'll.
Yeah, I was just saying that goes back to the point that almost each one of you made regarding being a finance business partner, having collaborative approach, integrating the function with the rest of the department, and not really working in isolation. We're almost on time. Last comment from Barka, and then we can sign off.
Yeah. So I think this question is very, very important because, even though organizations today are realizing the importance of shared services, but they are again not realizing that the real benefit does not lie in transaction processing. It lies in the other value addition activities. It lies with data analytics. It lies with the data security, data governance. So there are so many other elements to it. Automation, we spoke about finance professionals having the critical eye to identify the inefficiencies in the process and continuous improvement. I mean, this is like a whole new level of finance. So it's really just the key stakeholders or the strategic plan that is laid out for shared services to actually see that there is more benefit to it, and then to develop a roadmap that supports it. And then only, I'm sure, in organizations, you will start to see a different, a different perspective about it.
Yeah, I think the modern shared finance function has to move beyond transactional processing and administrative work to really being a value creating department. All right, that's a wonderful note to end the webinar. Thank you very much. Thank you to all those attending. Thank you to the panelists, Paul, Ish, Barka. I really appreciate all the valuable insights that you've shared. I definitely learned a lot from this, and I hope the attendees did as well. So with this, we'll be signing off. Thank you once again, and have a good evening.
Thank you.
Thank you. Thanks.
Thank you. Bye.